let's have a go at this together, shall we? So let's open up in our class notes a little piece of paper, as we've been doing, and see if we can set up a little working. Here we are. So, let me do it with you. Exam complication. Let's say could be in question 4 or 5, you know, the questions that cover standards, bit of writing, bit of numbers, or part of the big question 2, which is obviously on published accounts. Either the standards areas or published accounts. So, how shall I tackle this? I tell you, this paper is so easy. It is also a fundamental pillar to the ACCA qualification. If you're good at financial reporting, number one, you'll easily get a job, because there are lots of jobs available in financial reporting. It's a very practical skill. I don't think of this as theory. It's very practical. Though it's nice to know a few concepts, of course. That's the first very useful thing about it. The other thing, of course, is that if you know those 4 techniques, consolidations, published, cash flow, and ratios, bits on the standards, you sail through the exam. It's one of the great subjects in the syllabus, and really so easy to pass. If you just do a little bit of work, I'll show you some class work on the videos, we do some homework, I'll indicate how to do it, with full answers, as if I was standing by you showing you the steps. I tend to do everything through very, a few steps, step-by-step type of approach. So it seems to work with thousands and thousands of students over the years with me. Probably more structured than I was myself as a student. As a lecturer, one has to be, I suppose. Right, let's follow that through. So the question you saw earlier, so let's say pre-IAS 8, in other words, without detailed analysis, without the detailed analysis, that is to say continuing acquisitions, discontinue, that kind of analysis, what would the shareholder, the stakeholder do? He or she would take the total. Remember that stage all you had was a total in those days. These are all thousands, or indeed millions, in this question it's thousands. 775. And did the chairman say it's going to go up by 10%, you see? So 77.5, and so the answer here, 852. Just write that a bit more neatly. Sorry. 852.5. So the chairman says 775 is the figure today. It's going to go up by 10% next year. And so the shareholder says, okay, 10% on 775 is 77.5. Add that in, 852.5. Quite a simple calculation. Now, after IAS 8 was published, in other words, post or after the IAS 8, with full analysis now available, what we could do is this precious calculation, which when this comes up, students tend to do quite badly on this, and I feel very sorry about that, but hopefully not my students. So I'll show you how to do this. We'll start with a column for now. I might say nearby forecast. Leave a bit of a gap here so I can put in a few explaining calculations. All thousands. So let's start with continuing. $550 plus 10%. Oh, by the end of the year, would you agree continuing will continue into the new year? The very word continuing. So if I say plus 10%, I suppose you'll take your 550 plus 55, and therefore your answer here would be 605, you see? So by the chairman saying it's going to go up by 10%, obviously your continuing activities, for a college it'll be all the main qualifications, ACCA, etc., will carry on into the future. So if you've got 550 from that particular division, and it's going to go up by 10%, remember the future, the word continuing means it continues into the future, you see? Unlike discontinued, of course, which I'm coming to in a minute, but before that, apparently there are some acquisitions this year. So let's bring in some acquisitions. 50. Careful. Is the 50 for 6 months? But would you agree next year, I know this year you started in the middle of the year till the end of the year was 6 months, but would you agree next year you're reporting for 12 months? So the trick to look out for here is that this is for 6 months, but for 12, it'll equal double the 50, assuming the same rate of growth, etc. So that's going to be based on today's figures for 12 months, 100. And of course, because it continues into the future, we're going to say plus 10%. 10%. So I suppose I can add that to give 110 on the right. You see? So notice how the picture is changing. And then finally, you have discontinued. Which is 175. 175. And that's for 6 months. But would you agree, I know it was for the first 6 months of last year, or for the current year, I should say, but would you agree discontinued by definition means discontinued? It's not going to continue. So I'm going to put in a very confident-looking nil over here. What happened in the exam was people took 12 months for 175, in other words 350, and then took 10% on that, because forgetting that discontinued means it's discontinued. Now if you add that up, you come to a remarkable figure of 715. And that's what the forecast is based on these columnar details. Whereas here, if you remember, the original was 775. So the original was 775. In the days before the IAS, people would predict the 775 is going to be 852. So from 775, it's going to go up to 852.5. 775 this year, 852 next year. Good company to invest in. But once the IAS 8 comes out and analyzes continuing acquisitions and discontinued, it's no longer going up, it's actually going down. Can you believe that? That's an astonishing turn of events. It's actually down. You see, so I'm going to put an exclamation mark in there because that's remarkable. The original is 775. Without the analysis is 852. But with the analysis, it's actually gone down to 715. So we'd agree that's a much more accurate prediction. And that's what the examiner will expect you to discuss, write a few words on. So I've shown you how to do a typical numerical exercise. You might have to write a few words about it. So therefore, might not be a good company to invest in. You see the fascination of this subject. It's wonderful stuff. I've shown you a pathway through to passing this paper through the big syllabus and how to pass by being good on consolidations, published, cash flow and ratios. In the middle of all that, you have these standards. A typical standard is IAS 8, which, if anything, raises the interest level for a student. because standards are just best practice worldwide that have been enshrined in a little IAS, a little document for a few pages that shows you standard practice, best practice. And that's why you find that about 45% of our exam is based on those standards or standards knowledge. Okay, so there you are. That's the exam for you. To take you back to this particular little exercise, if you remember, we were saying the importance of identifying discontinued operations. You might look at that and say, without the columnar identification, the shareholders could have been misled about next year. So the importance is crucial. And also, how do you actually account for it? How about the figure work, as I've just shown you? So typically in the exam, there'll be 5 or 6 marks. Obviously, if there's a discussion, there'll be a little bit more. There I leave you with a few ideas as to what F7 looks like, and indeed how I approach this subject. It tend to be quite structured, steps and so on, classwork, homework, with full answers at the back of the handout. Thank you very much for your attention. I hope to see you on the course, and keep in touch through emails and so on, and I will do my best to guide you through this wonderful paper. Thank you for your attention.